Hello dear student, welcome again. I am Dr. Boraste from KTHM College, Department of Commerce. Today I am going to discuss with you an practical example number 4 of piecemeal distribution of cash, in which we are going to study the partner's loan, how we can pay it by using piecemeal distribution of cash through surplus capital method and one third party liability. So let's start with our example number 4. Let's start our example number 4 of piecemeal distribution of cash with surplus capital method. Our example is, you can take a screenshot of this example or you can write down it in your notebook. A, B and C were partners sharing profits and losses in the ratio of 3 is to 3 is to 2 respectively. They decided to dissolve their business on 31st December 2018, on which date their balance sheet was as follows. So look at the balance sheet as on 31st December 2018. Here we have a liability. First liability is capital of A, B and C, which is 24,000, 15,000 and 9,000. We have a third party liability, or we can say external liability, which is B's loan. So here B's loan is rupees 4,000. And third party liability creditors, which is 20,000. With that we have some assets, land and building, machinery, furniture, machinery, stock, debtors and cash. Cash is 0. That means there is no cash. So on the first day we don't have a single rupee. It simply means that we are totally dependent on first realization. After the balance sheet we have some adjustment. The partners decided to dissolve the firm and the assets were gradually realized as follows. On 31st January 2019, our balance sheet is on 31st December 2018, which is last day of 2018, and on the next year on 31st January 2019 we got first realization, that is gross realization of rupees 11,000, and we have an expenses of rupees 1,000. On 20th of February 23,000, on 31st March 2019 10,200, on 30th April 2019 13,000, and on 31st May 2019 12,000. Here we have, and the example ask you that you have to prepare statement showing surplus capital and statement of distribution of cash as per proportionate capital method, that is surplus capital method. So here you got first realization of rupees 11,000, but for getting 11,000 you expend rupees 1,000. That simply means on 31st January 2019 you get rupees 10,000 only. How it is calculated? So let's start with the solution. First of all, we will calculate our actual realization. On 31st March 2019, we got 11,000. On 20th February, we got 23,000, then 10,200, then 13,000, then 12,000. And we have these expenses. So we will calculate simply by deducting the expenses from gross realization. So here on 31st January 2019, the gross realization was rupees 11,000. When we deduct rupees 1,000 as expenses, we have an actual realization, that is gross minus expenses 10,000. In the same way, we will calculate another realization. So here 23 minus 320, 10,200 minus 600, 9,600, 13,000 minus 1,800, 11,200, and on 31st May, last realization is 12,000 minus 2,000, that is 10,000. So this is the realization amount. After calculating the actual realization, we have to solve the example. For this, we have to calculate statement of surplus capital. So for this, we have to draw a 5 column, that is serial number, particulars, Mr. A's capital, Mr. B's capital, and C's capital. On the basis of our problem or our example, we have a capital that is 24, 15, and 9,000. With this, we have a ratio of 3 is to 3 is to 2. So in the surplus capital, we will put down the balances of capital as per balance sheet. So in the first row, we will mention the balances, capital balances as per balance sheet, that is 24,000, 15,000, and 9,000. In the next row, we will put the profit sharing ratio, that is 3 is to 3 is to 2. So here the ratio is 3 is to 3 is to 2. And After that, we can calculate the unit capital. So unit capital is what is earlier video I already explained that unit capital is an amount which is a single unit. That means for 3 share Mr. A gives rupees 24,000. That simply means for 1 share he gives 8,000. So how we calculate it? Simply capital divided by profit sharing ratio. So 24,000 divided by 3 comes to 8,000, and 15 divided by 3 comes to 5,000, and 9,000 divided by 2 comes to 4,500. In this step, the amount which is less, that is 4,500, it will be considered as a unit capital, sorry, as a base capital. So for calculating the proportionate capital, we are going to consider 4,500 as base capital. So the proportionate capital equation is base capital into profit sharing ratio. So base capital is 4,500 and proportionate profit sharing ratio is 3,000. So 4,500 into 3 comes to 13,500 for in case of A, same in case of B, and 9,000 for C. So here it is a proportionate capital. The next step is to calculate surplus capital. So surplus capital is what? Capital balance minus proportionate capital. So capital balance is 24,000 minus 13,500. The balance comes as 10,500. That means the surplus capital of Mr. A is 10,500. And in case of Mr. B, 15,500 minus 13,500, balance is 1,500. And in case of C, it comes to 0. So this is our surplus capital of Mr. A and B. But we have to find out absolute surplus. That means a single partner who given an given an extra amount for the partnership firm. So here again we repeat all the steps. We are going to repeat all the steps. First one is profit sharing ratio, which is as I earlier mentioned that 3 3 is to 3 is to 2. So profit sharing ratio in case of Mr. A and B, it balance is only 3 is to 3 because C's balance is already nil. Now we will calculate unit capital. So unit capital is what? Surplus capital divided by 3. That is profit sharing ratio. It comes to 3,500, and 1,500 divided by 3, it will be 500. So here in this step the minimum amount is 500. So 500 will be considered as a base capital. And for calculating proportionate capital, we have to consider the base capital. So next step is proportionate capital, that is base capital into profit sharing ratio. So 500 into 3, it will be 1,500, and 500 into 3, again it will be 1,500. It in this way we can calculate the absolute surplus, and absolute surplus is surplus capital divided by proportionate capital. So here 10,500 minus 1,500, balance is 9,000, and 1,500 minus 1,500, it will be 0. It simply means that surplus capital is here is of Mr. A, that is 9,000. So the statement of surplus capital is here completed. That means we have to pay after the third party and other liabilities. When we will pay to the partners, at that time we have to pay Mr. A rupees 9,000 first. Then if there is an amount in the priority, we will consider about A's capital and B's capital. So in this way you can calculate the statement of surplus capital. Now just start our priority of payment, or you can made a priority to whom we have to given a priority. So the next step is payment of priority or priority of payment. So in this way you can calculate the priority. For this you have to see the problem. Here you can see the problem in problem or example. The BISC loan, that is partners loan, is 4,000 and creditor is 20,000. So here third party liability is creditors and B's loan is internal liability. So first of all we will pay rupees 20,000 to creditors. After the payment of creditors 4,000, we can pay to Mr. B's as a loan of rupees 4,000, and after that we will pay an amount as per surplus capital method or as per surplus. So on a priority of payment, first of all we will pick creditors, that is 4,000 20,000. Second one is partners loan, that is B's loan, 4,000. Third, absolute surplus capital of Mr. A, as we have find out in the statement of surplus capital, that is 9,000. After that we will pay surplus capital. In a surplus capital statement we have a surplus of A 10,500 and B 1,500. But in earlier step, that is here absolute surplus, we have already paid 9,000. That means we have already paid 9,000. Here he will get less 9,000, that is we have, which he is already received in the earlier step. So here Mr. A is he have a right to receive 10,500, but he got 9,000. That means actually he will receive 1,500. So Mr. A will receive 1,500 and Mr. B will receive 1,500. So here the ratio is equal to 1 is to 1. If amount will be less, at that time we will calculate the ratio, and it is 1 is to 1. That is 1,500 is to 1,500 comes to 1 is to 1. So balance amount whatever we have, we will distribute in profit sharing ratio, that is 3 is to 3 is to 2. So this is the priority of payment. It is very simple. After preparing the priority of payment, you can prepare a statement of piecemeal distribution of cash. So for that, you have to consider what column you have to draw. Here I have mentioned some column, that is date, then particulars, available cash, total liabilities, creditors, Mr. B's loan, and capital of A, B, and C. The the column of liabilities are based on whatever we have the liability. The person who is have a priority, his column we have to prepare first. Then the person who have a less priority, his column will be on the right hand side. So here we have prepared creditors at first column in the priority of payment. You can see here the creditor, that is 20,000. Then we will pay Mr. B's loan 4,000. So the next column is B's loan, that is Mr. B's loan as a partner's loan. After payment of partner's loan, we can pay capital of Mr. A, B, and C. So let's start the solution. We have a balances as per balance sheet. Just put on the balances on 1st January, that is 2019. Our balance sheet is on 31st December 2018. So on the very next day we will put on all the balances, and overnight it will not change. So the balances will be same. So here on the 1st January balances as per balance sheet, we don't have a single rupee of cash. Here, as I earlier mentioned while detecting the example, so cash is 0. So here cash will be 0. Total liability to 72,000. How it comes, I will explain later on. Creditor is 20,000. In priority of payment, you can see creditors 20,000, B's loan 4,000. Absolute surplus is 9,000. So here creditor is 20,000 and Mr. B's loan is 4,000. That is partner's loan. So these are the liability, and this is capital, as it is as same as per balance sheet. So in the next steps, we have to call the realization, that we don't have a single rupee. So we will call first realization, that is 10,000. How it is calculated, you can see here. The gross realization was 11,000, the expenses was 1,000. So actual realization comes to 10,000. That is gross minus expenses. So it is 10,000. So first realization is 10,000. Now we have 10,000 and we have to pay first creditor, that is 20,000. So let's pay rupees 20,000 to Mr. A. But we don't have 20,000, so we can pay only 10,000, as we have only 10,000. So total amount will be received by creditors. So let's pay to creditors. Creditors will receive 10,000. Our total liability will reduce by 10,000 and cash will be reduced by 10,000. So this is whatever amount we got 10,000 and we have to pay 20,000. So we are unable to pay 20,000. So we are going to pay only 10,000. Here the column total liability is very important. Why? It is the total of all the liabilities. So it is 72,000. Let's check. 20,000 plus 4,000, 24,000. Then plus 24,000, that is 48,000, plus 15,000, 63,000 plus 9,000, it comes to 72,000. That means we have to pay 70,000 as a total liability. Let's do concentrate over here. Our cash balance will be 0 and total liability is still 72,000, as we have already paid 10,000, and our creditors was 20,000, we paid just only 10,000. So still we have to pay rupees for 10,000 to creditors. Our other liabilities are as it is. Mr. B's loan is 4,000, still we have to pay, and capital is same. So in the next step, we will call second realization, because we don't have a single rupee here, and our second realization is on 28th February of 2019, that is 23,000, and the expenses is 3,000. So we have 20,000 realization. So here the second realization is 20,000. First of all, we have to pay creditors because its balance still we have to pay 10,000. In the earlier step, we have already paid 10,000. So let's pay to creditors. That is 10,000. Total liability will be reduced by 10,000 and creditors will be reduced by 10,000. So now the balance of creditors comes to 0. That means we have paid all the creditors and total liability still remains 52,000 and our cash is still we have a 10,000. Our next priority of payment is partner's loan, that is Mr. B's loan, that is 4,000. So in the next step we will pay to Mr. B as a partner's capital. So here we are going to pay to Mr. B as a loan. So Mr. B's loan is 4,000. So minus 4,000, total cash will be reduced by 4,000, total liability will be reduced by 4,000, and Mr. B's loan will be reduced by 4,000. After deducting all this, Mr. B's loan comes to nil, that is 0. We paid the amount to Mr. B as a loan 4,000. So balance of B's loan is 0. Still we have a liability of 48,000 and we have balance cash is rupees 6,000 after the payment of 4,000. Okay, now we have 6,000. Our next priority is absolute surplus of Mr. A, that is 9,000 and we have only 6,000. So we will pay rupees 6,000 to Mr. A and balance 3,000 will be paid up in the next realization as its payment is 9,000, that is priority of payment. Absolute surplus of Mr. A is 9,000 but we have only 6,000. So we will pay only 6,000 and in the next step we will pay its 3,000 balance. So here let's pay to Mr. A absolute surplus, that is 6,000. It will be reduced by 6,000, balance will be 0. Total liability was 48,000. We paid 6,000. Now we have 42,000 and we are going to pay rupees 6,000 to Mr. A. So his balance will be 16,000. And other balances of capital, that is B and C, is 0, 15,000 and 9,000. So here we have a balance of 0. Now we can call a third realization. Third realization is on 31st of March, that is 10,200 minus expenses 600 and actual realization is 9,600. So the third realization is 9,600. First of all, we have to pay 3,000 to Mr. A because his payment was, or his absolute surplus was 9,000 and we paid rupees 6,000 only in the earlier step. So in this step we are going to pay rupees 3,000 to Mr. A. So cash will be reduced by 3,000, total liability will be reduced by 3,000 and Mr. A's balance will be reduced by 3,000. So after the payment of Mr. A rupees 3,000, we have still cash rupees 6,600 and total liability is 39,000 after deduction of 3,000 from 42,000. Here we have a capital of Mr. A is 15,000 after the payment of absolute surplus, that is 6,000 in the earlier stage and 3,000 in this step. That means we have paid 9,000 of rupees to Mr. A as a surplus, absolute surplus capital. After that, Mr. A's balance of capital is rupees 15,000. Mr. B remains same and C remain same. So we have 6,600 cash. The next priority of payment is surplus capital. Surplus capital of Mr. A is 10,500 and Mr. B is 1,500. But we have already paid 9,000 to Mr. A in the earlier step, that is in absolute surplus capital stage. So out of 10,500 we are not going to pay again 9,000 to him. So 10,000 minus 9,500, the balance is 1,500. So in this step or in this stage we are going to pay Mr. A, that is 1,500 only, and Mr. B 1,500. Why here we are going to pay 1,500 only? Because in the earlier step he already received 9,000. That means 9,000 plus 1,500, he will receive 10,500 in this stage. Okay, now just turn towards this stage. That means we must have at least 3,000 for payment of surplus to Mr. A 1,500 and Mr. B 1,500. So total comes to 3,000. At least we must have 3,000 and we have 3,000. So now in this step we have 6,600. We are going to pay Mr. A and B to Mr. A and B 3000, that is surplus capital. So total liability again will be reduced by 3000 from 39,000, and Mr. A will receive 1500, Mr. B will receive 1500. So in the next step we have to calculate the balance. In the balance 6,600 minus 3000, it is 3,600, 39 minus 3, 36,000, 15,000 minus 1500, that is 13,500. Again here same, that is 13,500. This is our balance after the payment of surplus capital. Now after the payment of surplus capital 1,500, 1,500, if we have any kind of balance, then we have to pay it in all the partners in profit sharing ratio, that is 3:3:2, balance amount whatever we have. So here we have 3,600. So now we can pay 3,600 to Mr. A, B and C in profit sharing ratio, that is 3:3:2. So cash will be reduced by 3,600 and total liability will be reduced by 3,600. Now we have to calculate how much amount will be received by Mr. A. Here you can see 1,350, but how it comes? So equal to, we will calculate here, equal to how much amount we have to distribute? 3,600 into 3, that is Mr. A's share, divided by 3 plus 3, 6 plus 2, that is 8. So answer is 1,350. That means Mr. A will receive 1,350. Same amount will be received by Mr. B, 1,350, and Mr. C will receive 2 shares. So into 2, that is equal to 3,600 into 2 divided by 8. So he will receive 900. So it's very simple. Mr. A is going to receive 1,350, 1,350 to B and 900 to C. Okay, now we have a balance, that is 0. Cash, we don't have a single rupee now, because after the payment of third realization, all cash goes to absolute surplus and surplus capital part of it. So still we have 32,400 liability. You can cross check it that whatever balance you have to pay, the total of the liabilities comes to total of equals to total liability. So here 12,500 plus 12,500 equals to 24,300 plus 8,100, that is 32,400. You can calculate it by using your calculator. So we are on the right way. Next realization, because we have a cash of ₹0, so we can call our next realization number 4, that is on 30th of April, 13,000. After deduction of expenses we are getting only 11,200. So here realization number 4, that is 11,200. Okay, now we already paid all the liabilities, so whatever amount or whatever realization we are getting, we are going to pay it to the partners as their share in a profit sharing ratio. So we have 11,200. Now we can distribute it 11,200 to Mr. A, B and C in the profit sharing ratio. So we have 11,200. Mr. A will receive 3 share out of 5. Mr. B will receive same and Mr. C will receive 2 share. So this is one way where you can calculate the share of Mr. A, B and C, that is 11,200 into 3 divided by 8. Sorry, here I calculated 5, 8. So it balance is 4,200. So Mr. A will receive 4,200, Mr. B will receive same, and Mr. C will receive 2,800. Another method to calculate the share. So you have to calculate one share. That means out of 11,200, we have to distribute it in 8 share. How 8? It comes 3 plus 3 plus 2. That is, here you can see 3 share to Mr. A, 3 share to Mr. B and 2 share to Mr. C. So that is 3 plus 3, 6 plus 2, 8. So divide by 8, it will be 1 share. That is 1,400 is 1 share. You have to calculate it 1,400 into 3. 4,200, and 1,200 into 3 again B for Mr. B, 4,200, and in case of Mr. C it's a 2 share, so 1,400 into 2, 2,800. So choice is yours. You can calculate it by using your another method also. So after payment of this to Mr. A, B and C in their profit sharing ratio, we have a still again balance is 0. Still we have a liability of 21,200. Now we can call our final realization, that is on 31st May. Here the final realization is on 31st May 2019, which is of 12,000, where the expenses is rupees 2,000, and we have an actual realization that is 10,000. So our fifth and final realization is 10,000. Now again, as you say in see in the earlier step, whatever amount we are going to receive, it should be received by the partners in their profit sharing ratio. So in this step, we are going to pay Mr. A, B, and C in their profit sharing ratio. So less 10,000, total cash will be reduced by 10,000, balance comes to nil, and total liability will be reduced by 10,000, that is 21,200 minus 10,000. The total liability still we have 11,200, and 10,000 will be distributed in their profit sharing ratio, that is 3 is to 3 is to 2. It comes to equal to 10,000 into 3 divided by 3 divided by 5, sorry, divided by 8. So balance is 3,750. That means Mr. A will receive 3,750, Mr. B will receive same amount, and Mr. C will receive 2 share instead of 3 shares. So he will receive 2,500. So in this way, these three partners are getting the amount 3,750, 3,750, and 2,500. You can cross check it that our calculations are correct or not. 3,750 plus 2,750 equals to 7,500 plus 2,500, that is 10,000. That means we are distributing 10,000. It's correct. The last step is to find out the realization loss. Here, after the payment of 10,000 to Mr. A, B, and C, we have an amount of rupees 0. That means we don't have a single rupee. And our liability is still payable, that is 11,200. Now you can cross check it by totaling the capitals of Mr. A, B, and C. Mr. A's capital is still payable rupees 4,200, Mr. B's same, and Mr. C is payable to 2,800. The total of A, B, and C, it must be equal to total liability. So that is, here you can calculate 4,200 plus 4,200 plus 2,800, that is 11,200. As I earlier mentioned that total liability column is important in this case for cross-checking the realization loss. You can, if you don't prepare this realization column, say for example, you cannot cross-check that your realization loss is correct or not. But here you can cross-check it of unpaid amount, that is 4,200, 4,200 plus 2,800, that is 11,200, and our unpaid liability is same 11,200. It simply means that you have on a correct path. So in this way we find that 11,200 is a realization loss. So here the example is finished. Now in the next lecture we will discuss about another example of having multiple liability. Here we have seen just only one liability, that is creditors and Mr. B's loan. In the next step we will see another liability. It may be a government dues or any other liability, and we will solve that example in a very simple way. So with this I would like to say thank you very much.